What's up? Welcome back to another video. The trade from last week ended up being another banger. I posted the exact tree on Twitter, and yeah, it was set and forget. And if you guys followed along, congratulations, because well, yeah, this is just what we do in a time where so many people are losing money because they're following all of these YouTubers just bull posting irresponsibly, saying, "Oh yeah, this is strong support. Yeah, the bottom is in or whatever." Like, guys, it doesn't really matter where the bottom is. What's important is that we trade what the market is telling us, and for the last 4 to 5 weeks, it has been down. And it's clearly showing on the chart. And I am, so far, at the very least, to my knowledge, one of the only channels that has been calling every single major drop, and I've been giving you entries to take advantage of these drops. So if you're new to this channel, welcome. You're probably in the right place, because so far we are at 128 wins out of the last 163 trades called publicly here on YouTube. So we have a pretty high win rate. So yeah, if you're new here, welcome. You're probably in the right place because we have a high win rate. But anyways, before we get into the setup for today, I'm going to be hosting a masterclass in 12 days from now, breaking down this exact system that you're watching right here on these videos. And it's not going to be one of those webinars where it's like you're going to listen to like my childhood story and how I grew up and my childhood traumas or whatever. It's actually going to be a masterclass that has value. If you would like to secure your spot, click the link below. It's free, but if you don't sign up, you're not going to know where it is. You're not going to know when it is. You're not going to have the link to join. And just because you're on the newsletter does not mean you're automatically enrolled into the masterclass. If you want to sign up, it's free. Go for it. First link in the description box below. Starting things off on the daily chart, we had kind of, a bearish candle close. Last Friday, it was a bearish candle close as well. So more likely than not, we're going to be looking for a bearish bias. On the weekly chart, we are having a bearish bias as well because of, just this, right? We have a bearish weekly candle. Now, we are at the moment very fast approaching this support level. I know I mentioned like early on that, we don't really want to trade, these support levels or whatever we think about the markets, but it's still good to keep it in mind. Like, granted, I'm not going to be just telling you guys to place a limit here, place your stop loss here and, target whatever. Like, we're going to look for a reaction, right? When price gets into this level, we're going to look for a reaction. Only after we get that bullish reaction, only then do we jump into the markets, not before. And so at the moment, we're still heading into this fair value gap. Potentially middle of this week, we may, just kind of get some kind of a bounce. But at the very least, at this very moment, we're looking for downside. We are still looking pretty bearish. And so far, we're trading above the weekly open. And if you guys remember exactly the moment from last week, on Monday, I said that the high of the week is probably going to come on Monday or Tuesday. On Tuesday, the title of the video that I posted was quite literally the high of the week is in. And this is a perfect textbook example of the power of three playing out. A power of three is essentially when you are bearish on the weekly chart, you want to look for the weekly open. Any point that you go above the weekly open is an opportunity to sell high, where you're going to get a high of the week before a true expansion towards the downside. The weekly bias tells you what direction the true movement is going to be. So from that point onwards, you just use the open to your advantage. Now you can apply this to the daily open as well. If you are bearish on the day, you want to look for sells above the daily open, and that's going to give you an opportunity to sell high at high of the day to take advantage of the true movement. So just like what we did last week, right now, Monday is starting off higher, which we all know, like, the false move, right? At least based on this theory. So anyways, just to mark out another kind of key level to pay attention to, this is a fair value gap that in the event that we hit this either today or tomorrow, we're going to be looking for downside movement. Now, going down to the 1 hourly chart, in fact, I am just going to remove this the trade setups from last week because I don't think they're going to be relevant anymore. Anyways, Monday, so far, we have something interesting going on and a couple of levels that we want to pay attention to. One is the fact that we have relatively equal highs forming right before that fair value gap. So in the event that, price sweeps these relatively equal highs, fills in that fair value gap that I marked out on the daily chart and heads towards the downside, well, you know exactly when the high of the week is going to be. Well, when and where the high of the week is going to be. Now, so far, we have just filled in this fair value gap on the 1 hourly time frame. So I wouldn't be surprised if you start the dumping here from this point onwards. And by the way, this is intraday. Okay, what I'm discussing now is intraday. What I'm discussing here is something more like day trading, right? Because we're expecting this to get hit tomorrow and the high of the week is in, and then the rest of the week we go lower. But for this context here, this is intraday. So what we're potentially getting here is an Asia session where this is accumulation. London has swept above the high, filled in some sort of high time frame key level, and we are already getting a change in state of delivery. So technically, even right now, this is already a valid trade, taking advantage of the London session. In fact, we'll be putting this trade in once I finish recording this video. So if this trade gets stopped out, then most likely we're just reaching for this one, filling in this one. Like, if you just want the highest probability opportunity, then, wait for price to get into 96,800 because that's the daily fair value gap. You will have, again, confluence with the weekly power of three, the daily power of three, and you're going to be set. But this, intraday-wise, this is still a valid idea, so this is already valid. Now, by the time you watch this video, there are potentially going to be two possible scenarios. Now, both of these scenarios are going to be pointing towards the downside because the daily bias is towards the downside. We're going to be looking for shorts today. The first one is that potentially you have, already swept below, you broken structure, further changes the delivery or whatever, then, you can just kind of trade things lower, right? But the second scenario is that this trade has stopped out and we may potentially get some sort of a three drives pattern. And if between the hours of 7 a.m. to 10 a.m., you get that three drives pattern and then you get that CISD, that is going to be your setup for today. Now, what three drives pattern is essentially just a distribution pattern. Ideally, we want to look for these three drives pattern. Like when people talk about three drives pattern, some people may say, oh yeah, this pattern doesn't work. Are you doing it right though? Because the ideal three drives pattern that you want to look for is always when you are entering into some sort of higher time frame key level, in which case this is a higher time frame PD array. And by the way, this thing's already playing out. I wish I had my phone near me because I usually execute on my phone. But anyways, this is a sacrifice well made because you guys are watching here. Anyways, that is going to be the setup on Bitcoin. Next, we're going to look at Ethereum. Ethereum is looking pretty similar so far in terms of the 5-minute chart, but we're going to take a look at the daily chart. By the way, last week, if you guys remember what I said, this was going to be the weekly kind of objective. And yeah, ultimately that got swept during Sunday. And so far, the weekly bias is bearish, the daily bias is bearish. And so coming down to the 1 hourly chart, just to identify some PD arrays, and we do have PD arrays. So right here is the fair value gap. Ethereum is also breaking lower at the moment. Same exact setup compared to Bitcoin. The only thing is I would ideally look for this level to get broken. So that's 3175 before I jumped into that CISD short. But either way, this is already valid. You're looking at a potential Asia accumulation, London manipulation, New York distribution type of setup in terms of Ethereum, and just take advantage of that. Of course, by the time you guys watch this video, it's probably going to be around 6 a.m. New York. So just look for that setup during 7 a.m. to 10 a.m. New York, which is going to be the New York kill zone. But anyways, Solana also has a bearish bias going down to the daily chart. You also have a bearish daily bias. So far, this is going to be a key level where we can look for the high of the week to come in and then price to head lower. So far, it's looking slightly stronger compared to Ethereum, but still exact same setup. Right here, fair value gap with a weak high that just got swept during London session. So you're looking at the same Asia accumulation, London manipulation, New York distribution type of setup. And of course, this all gets invalidated if you do not get that 5-minute changes to delivery. Like if order flow continues to just be really bullish, both on Bitcoin, Ethereum, and Solana, if it just continues to be bullish heading into the New York session, then you just continue trade. Like it will probably end up being a no trade. Like one of the reasons that we are not going to look for longs today is because, well, the daily bias is pointing towards the downside. And one of the things that you will come to realize if you're new to this channel is that this system is highly predicated upon the fact that we have a time frame alignment, which means we only go long when the higher time frame, the middle time frame, and the lower time frame are both, well, are all pointing in the same direction. We don't want to go long when, for example, right now the higher time frame is pointing down. Let's say the 1 hourly is up and the 5-minute is up. It's never too late tomorrow to jump into a much more confirmed move. And also the fact that, we have a weekly bearish power of 3 bias heading into this week. So we know that this, first couple of days in the week are probably just going to be false moves anyways. Now, the funny thing is in Indonesia, for some reason, I am not able to view any economic calendars. Oh, all right, and just taking a look at the news for this week, we can see that news is going to come on Wednesday for the most part. Now, that also just adds confluence to our theory that Monday, Tuesday is just going to be some sort of a setup kind of day where we're going to get the true move starting on Wednesday, Thursday, and Friday. Do we have US news? Not really. So the two highest impact trading days are going to be Wednesday and Thursday. We have FOMC and non-farm payroll. So yeah, this week's going to be interesting. Play it safe Monday, Tuesday, and Wednesday, Thursday is probably when we are going to start looking to be much more aggressive. But anyways, make sure you follow me on Twitter if you want to follow up the live trades. Unlike other people that put their live trades behind some sort of signals group, I do it for free. And you know what else is free? The masterclass. Sign up. Like, it's going to be good. See you later.